Well, Mr. Narayan, your shareholders don't seem to think so. That was, of course, you would have caught the date key. That conversation took place on the 30th of April, where Mr. Narayan was sort of justifying why perhaps this royalty increase is warranted, but shareholders have voted. They are not in agreement. Let's take this forward with, some experts on the FMCG space. We have Kaustav Pavaskar of Sharekhan, as well as Abneesh Roy joining in from Nuvama. Gentlemen, good morning. Thanks so much for taking this call and being with us on this working Saturday. Abneesh, your thoughts? It's a very emphatic sort of statement that's coming from Nestle shareholders. What are your views? How would you look at it?
Yeah, clearly it's a positive development. We have a buy on Nestle with a target price of 3010. So there were investor concern on 2-3 things. One is, of course, this year, coffee and cocoa cost is highly inflationary. And on top of that, the 15 bips every year for the next 5 years was a genuine concern. And 4.5% is not a small number, if you see. So I think this shows clearly that shareholder activism is alive in India. In terms of growth matrix, if you see, even last quarter, Nestle was top quartile with 8% revenue growth and 12.5% EBITDA growth. Strong performance across most of the parameters. So I would say that this addresses concern, but we need to see if there is a revised proposal from the Nestle board. We need to see. This is something which we would await for more clarity. Second is investors will have questions because the Nestle parent did not get the higher royalty. Will there be any change in terms of their support to the Indian business in terms of products and R&D support, etc., innovation? We don't think so. India is easily the most important consumer market for any multinational company with the kind of growth, with the hockey stick curve in terms of per capita income. And already Nestle is charging 4.5%. So I don't think any multinational operates that the royalty hike has not been approved, so cut down on India exposure. No, we don't think so. So we'll await for more clarity on the revised proposal, but clearly a positive. Now, last point will be essentially on what Mangalam mentioned on the raw material. Frankly speaking, with a good monsoon of 6% plus normal expected this year, we would expect that a lot of the raw material for Nestle could cool off after Q2. So especially dairy and wheat, etc., the crop seems to be better for wheat versus last year. So we are not unduly concerned on Nestle margins, but coffee and cocoa, there is a pricing power also. So net-net, this is a positive development, and I think the stock should do well from here on. One more thing monitorable will be the FSSAI on the issue of the NAN and the infant food. Again, we don't see any big concern there. I think regulations will get changed gradually for the industry. Nestle meets all the guidelines in India, in our view, in terms of quality and process.
All right. Hi, Abneesh. Good to see you in. What is the target price you had given us?
3010. It's a buy for us. We are quite positive. Yes.
Oh, all right. And will you be tweaking it a little bit because now they will not be paying as high royalty?
So yes, you are absolutely right. Slight tweaking could be needed. It's a small number, 15 bips. I think more than the number, I think directionally from a overall corporate governance and from a minority shareholder protection, it is positive. But as I said, we need to see if there is any revised proposal from the board later, which will get clarity later. So short-term positive, but we'll await more clarity on the revised proposal, if any.
And I like the way you put it, right? India is a too attractive market for anyone to avoid just because, the royalty hike doesn't go through. Thanks a lot, Abneesh, for joining in and filling us in with that. Well, Kaustav as well is with us. Hi, Kaustav. Good morning. And thanks a lot for joining in. Well, how do you read this piece of news and what are the adjustments that you would be making?
Yeah, this is positive. See, 2-3 issues were lingering around the Nestle or hovering around the Nestle. One was the increase in the commodity prices. Second, the issue related to the infant food and also this royalty increase, because it is a 4.5% at the end of the increase which was over the period of next 5 years. So obviously for the shareholders that in the current environment when commodity prices were going up, the demand environment was not as great. Though Nestle was doing exceptionally well in terms of the growth and in terms of EBITDA growth, overall demand environment in India was not that great. So I think it is directionally positive for Nestle, and I think stock should perform well from here. Still, there are certain issues which should have more clarities in the coming months. But obviously, this is directionally positive for Nestle, and 15 bips kind of impact. Obviously, not much on the earnings this thing, but it is positive for the company.
Okay, got that. Kaustubh, what's your price target on the stock right now?
See, we have a hold rating on the stock, and we have a price target of 2,850. But we believe that if the commodity prices stabilizes from current level, and if there is a margin uptick from current levels, and if company continues to perform well in its domestic business, I think there would be re-rating triggers in the near future.
All right, gentlemen, appreciate you joining in. Thanks a lot for filling us in on a quick analysis on that front. So no two ways about it. It's a relief coming in for shareholders, and they'll take it positively. However, we need to wait to see whether or not there's a revised proposal that comes in from the parent. Let's focus on another stock, JSW Steel.